Awesome. First of all, I want to take this opportunity to welcome all of you. It's a pleasure to have you today. And today we're going to have an amazing webinar. And we hope that you take notes. We hope that you're prepared to take notes because what we're going to show you today is going to make a difference in your business and especially on your clients. This is all about your clients. Remember, one of the most effective way to grow our business is to make sure that our clients are always happy. So what we're going to show you today is a way for you to make them happy. So again, if you look at the screen, and I want to ask you a question, please, can you type in the number 1 if you're able to see our screen? There's a chat window. If you type number 1, you can, there we go. I see Angeli. Thank you, Giovanna, Carlos, Maria, Andy. Thank you guys. Dalila, thanks. Awesome. And if you're not, yeah, thank you, Kamaria. Awesome. All right. Awesome. So it looks like most of you can see our screens. Maybe you're in listening only mode. That's also fine. Just make sure you're ready to take notes because the content that we're going to be sharing is going to be great for you. So now we further ado, let's get started. Let's officially get started. And as you can see from the title, this is our this webinar is brought to you by TBP Pro. And in a few minutes, Jason's going to talk to you a little bit more about who TBP Pro is and how we can help also your business. Today's webinar is understanding vehicle expenses in our software, which is TBP Pro Desktop. And this webinar is going to be hosted by Jason Garner. And just to give you a quick intro on Jason, he's currently our TBP Pro president. He's also an enrolled agent. And he's he has a business too, which is Garner Tax and Accounting, and he has over a decade of experience in the tax industry. And there's a lot of knowledge and experience that he has, and he's going to be sharing some of that with you today. And he's going to be talking about one of the ways for you to keep your clients happy. Remember that in order for us to grow our tax business, it's important to make sure that we keep our clients happy, especially when it comes to their tax refund. So that's very important for our clients. So we want to make sure that, again, they're happy. So Jason, if you want to take it over.
Thank you very much, Richard. I appreciate that introduction. And I'll go ahead and take the focus off me, and we'll put it here on our agenda for today. I also will go live on my webcam. We are one big happy family at TBP and appreciate the personal connection. So just want to make myself available to you guys, and that's something that we do at TBP. And matter of fact, we all list our personal cell phones when it comes to working with us because we're here to help you. And that's going to be the first point on our agenda today is we're going to talk a little bit about who is TBP. Then we're going to move into vehicles and the IRS, or what they're looking for and the different ways that we can record that information. We're going to take a look at the 2 options that the IRS gives us with the actual expenses versus the standard mileage. It's nice to have options. IRS doesn't always give us options when it comes to tax code. Some of it's black and white and you must do it like this. Not always the case with vehicles. We want to also take some time to just talk about recording vehicle expenses and just make sure you can pass this information on to your client. One of the last things we want is for someone to have a very nice vehicle expense that really helps their taxes and they didn't keep the right records. While there is a difference between fraud and poor record keeping, we certainly want to have good records as well. Then where we'll spend the majority of our time today is we will actually go in to the TBP Pro Desktop application, and I'm going to show you 2 or 3 different examples about how easy, how fast, and how powerful the calculations are when it comes to vehicle expenses. We'll start to wrap up our presentation today talking about the TBP suite of products, because TBP does stand for taxes, bookkeeping, and payroll, but it just starts with taxes. There's more to that. And then an invitation to join our community. Well, our community is TBP, and we like to say we are TBP Pro, so short for TBP Professional Solutions. The T, as we talked about, is taxes, and we start with taxes, and that's our focus, but we do not stop there. The B and the P stand for bookkeeping and payroll. So we are TBP. We are taxes, bookkeeping, and payroll, and we have a simple motto of turning tax offices into year-round revenue machines by offering those additional services, by making more money with taxes, but then at the same time, offering those additional services as well. I invite you to check out our website. Many of you have as you registered for this webinar. It's simply tbppro.com. Also, check us out on Facebook. It's just TBP Pro Solutions. Follow us on there. We're always posting helpful information and information for more webinars about how to provide the best service for your clients. Let's jump right into this. Let's talk about vehicles and how they're on a tax return, because this is becoming something that is more and more prevalent on tax returns. Well, I drive my car. I drive it for business. A lot of our clients walk into our office thinking that's a deduction. Doesn't matter if I paid taxes all year, I'm due for a huge refund. I drove it to work. I spent $60,000 on it. This is just some of the things we get thrown at us as tax professionals. We got to decipher this. We've got to make sure that we're getting the appropriate information from them, that we're following the tax code, and at the same time, we're following the tax code to their best interest, because we have options, and that's our job. We want to maximize refunds or lessen amounts owed. So the IRS has this classification, and they call it listed property. So what exactly is listed property? And items that are considered listed property have actually changed, some of them quite recently. But listed property is a depreciable asset subject to a special set of rules if used predominantly for business purposes. Now, that used to include a few other things, but right now, that is almost all vehicles. That'll be 99% of what you deal with when it comes to listed properties. And also, I bet the last few years, especially if you're in more larger city areas, you've seen more and more people come in that have made side money or even a full-time job out of Uber or Lyft driving. This is very important stuff as far as their tax return. Well, let's talk about those listed property assets or those vehicles. And by the way, they are depreciable assets. And the first informational webinar that we put on a few weeks ago was about depreciation in TBP Pro Desktop and how to do that. That video is actually on our YouTube page right now, and I'll show you that along with the other videos posted as we wrap up this presentation. So listed property, we just kind of define special classification for assets that lend themselves to both business and personal use, So the IRS knows with these listed properties that more than likely, they're going to be used for both business and professional. And that fits the example of a car or truck to a T, because most people using a car or truck for business purposes are also driving that car or truck to the grocery store, or to work, or to school. So we have personal and we have business expenses. And what the IRS wants to make sure is that we're classifying and dividing that appropriately. What the IRS doesn't want is for us buying $60,000 cars and having $60,000 write-offs without seeing exactly how that car is being used and when it's used and how it's being used for a business. So with that, the IRS is very interested in that vehicle. They said, that's a listed property. We want to know about it. So we're going to put special record requirements on that listed property to determine personal versus business. Now, with vehicles, that actually becomes a very simple calculation. That is essentially the percentage that is, you take the miles for that car within that tax year, and we take the percentage of personal, and we take the percentage of business. And then that percentage becomes the business percent use. And remember, we're looking for more than 50% on a lot of these with those listed properties. Now, when it comes to transportation expenses, you're going to have clients that come in all the time, and they're going to say, well, I put a huge logo on my car. So everywhere I drive, I'm advertising. That's transportation expense, right? And of course, you're going to have to break it to them that that doesn't necessarily mean that's a transportation expense or that's an deductible mile, if you will. They're also going to come in and say, well, I have to drive back and forth to my office every day. Those are miles. Well, we're going to have to take a look at that because it's my job as a tax professional to maximize your tax return. And at the same time, if you ever get a letter from the IRS or an audit, we're ready to defend that with 100% certainty, or every legal penny, if you will. So our transportation expenses are our vehicle business expenses, are getting from one workplace to another in the course of your business profession. Now let's talk about that for a second. One workplace to another does not mean getting from your home to your tax home. And your tax home is usually from your tax home to your principal place of business. Now that's where you're going to work. That's your office. That's where your headquarters is. That's where you go to your job. Your mileage commuting from your home, your tax home, to there, that's not business expense or business mileage. However, if you go to work and then have to go somewhere else, whether it be another workplace or a temporary workplace, that is business mileage. If you go to work and then have to go pick up something for your job, for your office, that's business mileage. If you go visit clients or customers, perhaps your home office, perhaps you're taking advantage of the nice features within TBP with our remote signatures and mobile apps and things like that. You have a home office, but you have to go visit a client, or you want to go have a face-to-face. That's going to be business mileage. A business meeting that's not at your regular workplace, business mileage. Temporary workplace, that's business mileage. So let's kind of summarize this for a second. Going from home to work, that's not. Putting a logo on your car and driving around town, that's not. Getting somewhere because of work, and that's probably the best way I can summarize this. Getting to work or going somewhere else because of that work, that's what we're going to include as business mileage. Then, because we're dealing with a listed property and the IRS is very much interested in the breakdown of personal versus business, we're going to have our personal miles, which is everything else, and then we're going to have our business miles. And we're going to take our percentage from that. Now, in addition to knowing exactly what is a business trip or what are business miles, the IRS has fairly strict record-keeping requirements that they want us to do. And if you've done these returns before in Schedule C or E or other parts of a return, you see those questions usually. Was the vehicle available for personal use? Could you have another vehicle or 100% owner, something along those lines? And then you got another one. Is there evidence of the business mileage, and is it written? That's what the IRS are looking for, and that you as a tax preparer are answering yes to. So that's something to keep in mind. And remember, we're looking for every legal penny. We want to maximize what we get out of our tax code as tax professionals. And at the same time, if there's any question from the IRS, we're ready just to answer that and move on. So what the IRS is looking for is a starting point and an ending point. Where'd you go? You went from your home to somewhere? Well, that better be a temporary location. You went from the office to meet a client? That's your starting point. That's your ending point. IRS wants to see the date because most clients are going to be on a tax year basis. I mean, everybody has some kind of tax year. Most clients are going to be on a calendar year. And we want to make sure that that falls within that specific tax year. And then obviously we want the actual mileage. We want to know how long was it from point A to point B. How many miles did you drive to get there? Because that's very important, as we've already discussed. The IRS wants this documented or written. You've got some options to relay to your clients. And also, I'm talking to a lot of tax professionals, which means I'm talking to some self-employed individuals, and I'm talking to some people like myself that do taxes as a additional income as well. So this applies to you as well. But that documented or written, that could be a notepad in your car. That could be an Excel sheet that you update when you come back in. But also notice that I've got apps count. And there are a ton of apps out there that allow you, when you take off somewhere on a business trip, to push a button. And because of the GPS and that phone and the date and time automatically recorded, you're done. When you get to your location, press the button again. And that counts as documented or written evidence that we can use and our clients can use to make sure that we're not only doing this to the letter of the law, but we're having excellent records as well. So keep that in mind. Starting point and ending point, date, actual mileage, and then documented or written. So when it comes to vehicles, once we've got those business miles versus those personal miles, we've got a percentage business use. Could be 50%, could be 90%. We look at that now, and now we know the percent used for business. And the IRS says, hey, your call, tax professional or taxpayer. You can use your actual expenses for that car. Or you know what? We'll let you count 58 cents per mile. You can choose either one of those. Can you choose them both? Absolutely not. That would be nice, but it's one or the other. And what the IRS tries to do is they try to look at these expenses on the left, and they try to get this mileage as close to that as possible so that a lot of times these kind of equal out is what they're trying to do. But you still have the option, and as we're going to look at in the software, they always don't equal out. So mileage is easy. It's 58 cents per mile. You drive 100 miles, you got a $58 deduction. Simple calculation. Actual expenses is, well, that's what you spend on that car. So that's obviously the gas, the oil, and the maintenance. That's your tolls. Any kind of toll road, that's parking, that's insurance. If you're leasing that car, that counts. If you've got a loan on it, the interest actually counts. The taxes, the fees, tag bills, ad valorem, that all counts. And then there's something else, depreciation, which I said earlier, we did our first informational webinar on depreciation. And that's simply taking the value of the car and dividing that by a certain amount of time. Now, there's all kinds of tricks and different ways to do it, but just to simplify it for today's purposes, since it isn't actually about depreciation, it's like taking a $20,000 car over 5 years, and you're going to average a $4,000 a year deduction. See, it's still $20,000. You're just not counting it all in that first year. So that's my actual, and that's my mileage. Now, keep in mind with mileage, that's all your business mileage. That's just business mileage. So that's already 100% business deduction because you're not recording or you're not using the mileage from work to home to go see your family, to go to the movies, or, well, things we used to do before the pandemic. So you're not doing those. You're not recording those. So that 58 cents per mile, that's 100%. Now, the actual expenses, you may be driving that car 50%. And you may have you have insurance, let's say it's $600 a year. You're not going to count $600 a year. You're going to have to take those actual expenses and apply them to the business use percentage. So like, for example, if you've got a 50% use vehicle and you've got $600 a year insurance, that does come out a little cheap, but we'll use that example anyway. You've been a very good driver and used Allstate or something like that. But that insurance is a $300 deduction. And that seems like a lot of calculations, and it is, but that's something that TBP Pro does very well as far as helping you with this. And what TBP Pro Desktop does is we've got all these calculations and we know how these work already. We're going to simplify this to ask you a few simple questions about the vehicle, and then we're going to do all this for you. But what this is for is an overview of how this applies, because we want you able to explain this to your clients. We want you to be able to utilize these expenses yourself, and we want you to be able to make sure that you're getting the most from your tax preparation software. So which one should I take? Yes.
Yeah, so we have a question in the chat, and the question is from, my apologies if I mispronounce your name, Surjit, I guess. He's asking, hi, how those taxi drivers from, let me see. So he's asking from home to first client pickup, does that count as a business mile or commute miles?
That would count as business miles, because a taxi driver, when you're leaving from home and going, you're meeting a client is what you do. So as we discussed earlier, that travel to meet clients, you're good with business miles there. Now, if you had a headquarters that you reported to as a taxi driver, from home to that headquarters would not be, but going from home to meet a business client, we're going to count those as business miles. Yes. Good question.
Great.
So which one should I take? And by the way, thank you very much for that question, by the way. Which one should I take? Well, the answer is the best. Now, I didn't say the biggest. I said the best. And some of you tax professionals are like, I know, I do this, I got this, I know what you mean. But let's talk about the best for a little bit. Somebody that had a very good year and they're making a lot of money, that may be the biggest, because we want that deduction. You may be talking to someone who had a very good year, but is planning an even better year the next year. That's something we might need to consider when it comes to depreciation with the vehicle. We may have someone who didn't have that great a year, and we've got earned income credit to consider. We don't necessarily want to max out their deductions. We might want to max out their income to get more earned income credit. So the answer is the best. And that's what you as tax professionals are doing already. And that's what hopefully you're going to be doing more of after this webinar, because the answer is simply the best. And that's why they come see you, because you're going to get them the best answer.
All right, Jason.
More coming in?
Awesome.
Fantastic.
Yeah, yes. So again, thank you for answering that question before. And I also want to take the opportunity to welcome. We now have more people that just connected. Thank you, and I want to remind you, you are at a TBP Pro webinar. Today we're talking about vehicle miles and how to do those deductions in the software. And we do have two questions, Jason, for you. So the first question is, hi, I have a question. If a tile contractor going to do a work to a house, is that a business? That's a business mile, right?
I would consider that a, excuse me, a temporary work location, because you're going to something that's not your usual office to do work. So yes.
Okay. The other question is around the same, I guess the same, almost the same. She's asking, what about janitorial of commute to buildings? Are those business miles?
Yes, I would say so, unless you're commuting to your primary work address. Like if you're a janitor at a school, commuting there, that's not going to be business miles. That's going to be your commute miles. But going to someone's house to clean it, again, that's a temporary work location. So absolutely.
Great.
Thank you guys.
Dalina say thank you.
I see that.
That's all we have for now.
Thank you, Richard. And, you know, as you see those come in, I appreciate you emceeing on that and letting me know, because I'm just kind of looking at the screen. And, you know, a lot of people think taxes are boring, but that's something us EAs, we do like to do. And try to make this as interesting as possible. And the way I do that is turn that into you getting more money for your clients, keeping them happy, so you make more money as well. So let's talk about that, because now we've got a good understanding. We got a firm foundation that we're going to build on. We're talking the talk with our clients. We're giving them that inside info as professionals. We're telling them, hey, I got your back. I know what we're going to use. I know how you're going to record it. We're going to maximize your taxes. And if the IRS comes knocking, we don't care, because we're ready. You've got your recorded mileage. We know what's a business mile. Let's put these on here. Let's get what you deserve. Tax code's written for a purpose, and that tax code is written to make sure that it's fair. Let's make it as fair as possible by taking full advantage of what we can do legally. Let's do it. So we've talked the talk. We've got business mileage. Let's look at some ways that this is going to be on a tax return. Obviously, it's going to be on a Schedule C. It's going to be, and that's a small business owner. And a lot of you as tax professionals are filing a lot of Schedule Cs. You may even file one for yourself. There's Schedule Es. That's for rental properties. Now, not a lot of mileage is taken for rental properties. But if you need to go to that rental property to fix something, that's mileage we could take. Schedule F for farms. If you drive somewhere to pick up feed or fertilizer or whatever it is, that's going to be mileage. When we record these on our personal return, and these are a few of them, I know there's a few more. I know that there was 2106 for a while for employee non-reimbursed expenses. Those have pretty much gone away except for a few very select tax returns. So I'm not really going to cover that today. Maybe that comes back in the future and we do another webinar. We'll let you know. But right now we're going to stick to these guys. And 4562, if we're taking any kind of actual expenses or depreciation, to be quite honest, that's a bear of a form. It's got a lot of fields and a lot of calculations. With TBP Pro Desktop, for most of your assets or vehicles, if you're taking actual expenses, you don't even have to touch it. We'll do the whole thing for you. And obviously, for our other entities, because there's 1065 partnerships, which are non-incorporated businesses owned by more than one person. That's not a qualified married joint venture. And there's corporations. There's 1120s and there's 1120Ss. These are just some of the forms. These are the most common forms, or schedules, or returns, excuse me, that you're going to see vehicle expenses. And now that I said we talk the talk, we know where they go. Oh, excuse me. Our next slide is simply vehicles in TBP Pro Desktop. And if you're just joining us, as Richard said, you're just in time. Yeah, we've talked about the basics, and we've talked about how the IRS looks at vehicles and how we want to record the mileage. But keep in mind, we'll record this and put this on YouTube. But now we're getting into the bulk of our information. We're going to go into the software. This is TBP Pro Desktop. This is our desktop application that's been around for years. Very reliable, tons of time-saving features, very good at getting returns out and ensuring that the software works for you and not the other way around. This is our main screen. And as you see, I've got 5 returns in here. This is the software I use for our informational webinars. I'm going to go ahead and click on Select to Return. It gives me a chance to search last name or social, but I'm going to click Go and display them all. We're going to be using Jason Business today. Also notice we had Jason Stockmaster. That was another informational webinar that we put on because there are a lot of people jumping into stocks right now. And I do it myself. It is very addictive. There's nothing quite like earning a couple hundred extra bucks in a day just by pushing a few buttons. And we went through how those affect the tax return. And that's on YouTube as well on our page. You can check that out and get a lot of good information from that. Let's jump right in.
Jason.
Yes.
Jason, before you start with the program, with the software, there was a question from George. He's asking, it was my understanding that the IRS would let you use either program, but you must stick to one you used the first time. Am I right?
For the most part. So The IRS, if you start using depreciation as part of actual expenses, you're going to want to depreciate that for the life of that asset, which is typically 5 years, is what you want to do. Now, you can start with mileage and then consider moving to actual at that point. So you can switch back and forth per year, but keep in mind, if you want to do actual and use depreciation, which you want to use depreciation if you do actual, you're going to need to finish that depreciation typically for the useful life of that asset, which is 5 years. So there's some loopholes and ways around that. We're not going to get into that today, but just keep in mind, you start on depreciation, you probably want to finish that without it getting just uber complicated and a high risk of an audit. Very good question. Thank you for bringing that up.
Yeah, George says thank you too.
Well, you're very welcome, George. And thank you for joining. So I want to take a look at this return. Now, keep in mind with TBP Desktop, TBP Pro Desktop, we start with the basics on client data, and which I went ahead and filled out for time purposes. So we start with the client data, collecting information about our client. Very easy to learn, very streamlined, easy to use software. So let's take a look at this, because once we do that, we start adding forms that we're going to use. We're forms-based software. And this is our list of forms. Now notice that we've got Schedule C, E, F. We've got a bunch of different forms in here, W-2s that we can use and just add, which show up on the left on our forms tree. And we can get back and forth to our Schedule C, to our Schedule A, to our 1040 with just a couple of clicks. And we can see these real-time calculations. For today's time purposes, instead of going through the software too much, I've got a few of them set up already. I've got a Schedule C, a landscaping business. You can see that I've went in and filled out some basic information about this. You can kind of scroll down and see I've got just a little bit of income in here, not much, just enough to put it into the return. Now, individual comes to us and they say, now obviously for this landscaping business, I'm driving. I'm leaving my tax home and I'm going to see clients all over the county, maybe even a section of the state, if you will. Had a good year. So I got a lot of mileage. And thanks to you, my tax pro, I used this app, or I wrote down all my mileage and I got it right here, and I am audit proof. I am ready to go. I am ready to take these miles. You say, fantastic. And then the client may say, well, which one should I take? And you say, well, let's take a look at that. If you're taking notes, here's a good one. You can click on add form, and let me move my screen share just a little bit and click on depreciation. Or you can just press Control N as a new in TBP Pro Desktop, and it'll take you to our depreciation module, which is also where we put our car and truck expenses. So they come in and say, great, let's enter it up. Let's double click here. Now what I need to do is I need to enter your vehicle. I don't have one yet, so it's pretty simple what I'm going to do next. I'm going to click on New Asset. Thanks to TBP Pro, we check with the IRS every year, and we put in their recommended asset class codes. From there, we determine the useful life, the method, and the convention for the depreciation on that. Not something you got to look up in some thick book every time. We got you covered. So we're going to say they drive a Nissan. We need to know when they started using that, and then we need to select it from a class code. Now, most of the time, this is going to be this code 6, gas-powered automobiles under 6,000 pounds. You've also got electric automobiles. That's coming more and more popular. There's also some tax credits we could do on that. Maybe we do another informational webinar. You can put a chat in if you'd want to see that later on, because those are becoming more and more popular. We've also got light duty trucks, and we've got heavy passenger vehicles. For today, this is the one you're probably going to use the most often. I'm going to use that. So all I've done so far, what kind of car do I got? When did I start using it for this business? Double click on my asset. This is what we use to do all that background calculations, all those background calculations for you. We want to simplify and streamline it for you. Now remember, we can take actual versus mileage. So let's say they bought this car for $25,000. That's my original cost or basis. I got a salvage value, section 179. We'll come back to those in just a second. Most of the time, this is what you're going to do. Original cost or basis. Then we're going to ask our tax professional these questions. Was it available for personal use? A lot of times it's yes. It's going to be both, right? Was it used by more than a 5% owner? If we're dealing with a lot of Schedule Cs and sole proprietorships and entrepreneurs, most of the time that's going to be yes. Is another vehicle available for personal use? 50-50, we'll say yes. Do you own this vehicle? More than likely yes. Could be a lease, but more than likely yes. Two very important questions, because what I'm getting at here is I'm going to enter the overall information for this vehicle. TBP Pro Desktop is going to tell me which one's best and let me choose it, unless I tell it to force one of these. So I have that option in there if we need to use it, but I don't want to. I'm going to say no on this forcing. I'm going to let the software tell me which one is bigger for my client. Then we're going to decide which one we want to use. Then, was acres or makers used in any previous year? Now, this goes back to the question that we just had. Remember, we were talking about switching back and forth between actual or mileage. If we start depreciation, we need to continue using depreciation for the useful life of that vehicle. And if we do that, we would need to say yes. But notice this is grayed out. My more astute observers will know why that is grayed out. And it is because we put it in service this year. I'm in last year's software because we're still getting this current year, this next year is up and running. So that we don't have a previous year. This is what I need to do on this front page. Also notice, because of the asset code I selected, listed property. First thing we talked about. Software puts that in there for you. I see a couple of questions popping up. I'm going to go to the next tab, finish that, and then we're going to take a timeout for questions. I'm going to click on this next tab for mileage and expenses. Now, this is some very nice streamlined calculations in here because I happen to have two Schedule Cs on here. And a lot of times, entrepreneurs, side gigs, they may do multiple things. Our software actually allows you to enter the vehicle one time and split accordingly between those. Very powerful calculation, saves a ton of time and a ton of manual calculation on your part. So we start here, total vehicle mileage for the year. We're going to say that that total vehicle mileage was 20,000 miles. Total commute mileage for the year is something that we want to put in there to make sure that we're not overusing the mileage. Remember, we talked about commute mileage versus business mileage. Can't use that commute mileage. So we're going to say 10,000 of that. And by that, I mean driving back and forth to home. So 10,000 of that was driving back and forth to home. Now, you can use this field or you can do average daily commute because somebody may not know what did I drive it for the year. They may not have kept the best record. You could put in the average daily commute or the distance between their house and their work and back and put that in there and we'll calculate based on that. But if I drove the car 20,000 miles and 10,000 of that was commuting or miles I can't use, how many does that leave me? Well, that leaves me 10,000 miles that might be business. So my next section here is for landscaping. I'm sorry, it's my activities. Please excuse me. And my activities are my schedules or forms that I've already added to this return that can have business mileage. So for now, I'm going to say that 5,000 of those miles was for my landscape. So out of my 20,000, 5,000 of them were business, or at least for that landscape. I'm at 25%. Do I need to know this? Do I need to calculate this in my head? No, we got you covered with that. Down at the bottom is where I'm going to put my actual expenses. I can come in and put my gas, oil, and repairs. Did I have to rent a vehicle? Do I have inclusion? Did I get a value of an employee provided vehicle? Am I paying a loan on this? Did I have interest paid on that? Did I have parking fees and tolls throughout the year? Chances are yes. Did I pay taxes on this car? Chances are you did, especially the year in which you bought it. So we're going to keep this simple and keep it at 500. And then look at the questions. We talked about this already. And you as a tax professional are answering this. You're clicking this button. Do you have evidence to support your deduction? Remember, we talked about evidence. We need to have it written down or in some kind of app or some kind of electronic format. They still use the term written, but remember we talked about apps are okay. This is all we're entering. We're going to do a lot of calculations based on this, and I know I spent some time on it. And I'm about to take the questions that we have entered into the chat, and feel free to add any more. But all we have done is we have entered what we paid for this vehicle and when we bought it. We ask some simple questions that we just need to ask our taxpayer. And then we entered some mileage and some total expenses. Hopefully they're keeping. If you're keeping the books for them, that we'll discuss in a minute, that'll be even easier. We're ready to let the calculations take over. Now, let's pause for a second and let's see what questions we had come in on the chat.
Hey, Jason.
Yes.
Hi, it's Kiani. I just wanted to introduce myself to everyone, letting them know I'm part of the TBP team. And I wanted to thank you guys for joining this webinar. We're very grateful to have you here and hope you're learning as much as you can from Jason, our president. Jason, I don't know if you mind, I'll go ahead and read the questions for you so that way you don't have to move the screen.
Fantastic.
Great. So I have a question here from Dalila. She says, I have another question. If someone brought a work truck 2 years ago or 3 years ago, we can't depreciate it?
Well, you can. And what you did, if you placed it in service 2 or 3 years ago, is you actually didn't take the depreciation in those years. So you're missing a pretty decent deduction during those years. And so if you wanted to start depreciating that year, you would actually have to go back and amend the returns, take off any standard mileage that you used, and go back to actual expenses. So that is a very good question. That is very doable with amended returns. And thankfully, the IRS is going to let us start e-filing amended returns next year. And yes, TBP Pro Desktop will have that. But yeah, that would require some back work on your end if it was already placed in service, and especially if like some standard mileage had been taken. Very good question, Delilah.
Great. Thanks for that. If anybody else has any questions, Angeli, Brenda, Carlos, Giovanna, guys, if you have any questions, feel free to unmute or write them in the chat and we'll continue answering.
Yeah, what I'll do is I'll just take another pause after we've covered a few things, because, you know, as we start putting these together, I want to make sure that this flows and that you're seeing what's going on. So where we are now, we've entered this information. This is basics. This is info you get from your client. And like I said, if you're keeping the books for your client, and we'll talk about that, it becomes even easier because you've got all these vehicle expenses already done. But believe it or not, I'm going to click close. I'm pretty much done. I have now a car or truck entered as an asset. Notice it's went ahead and calculated some depreciation for me. Does that mean it's counting depreciation? Not necessarily. Let's click on return to list and let's click on close. Automatic real-time calculations built in. My refund just jumped up into the 4,000s. Just like that, calculations are taking place. Where you see everything going on with TBP Pro Desktop is the car or truck worksheet way down here on the bottom left of my forms tree. Let's double click it. I got to move a couple things off my screen from Zoom. Please excuse me. But you'll notice from here, this is our car and truck expense worksheet. One of the first things we're going to do is we're going to list the different schedules or businesses that you could have depreciated to. And then we're going to list the general information. Now remember, you entered this in. This is the basics. Notice the software calculated the % business use from the mileage. So we already know we've got 25% business use. We already know if we want to use standard mileage, it's $2,900. We don't stop there. Here's what we're going to do. We're going to come in and we're going to add your gas, oil, your other ones, and your depreciation. Notice that that comes out to $1,750. So if we would have taken the standard mileage, we would have had $2,900. If we would have taken the actual, we'd have had $1,750. Which one are we taking? Well, we're taking the best. Now the software is going to put the biggest one on there for you automatically. And you can see greater, actual, or standard. Actual is not checked. So we are taking standard. Our allowable is our standard mileage at $2,900. But notice, software did depreciation, added up all the actual expenses, took the percentage that is allotted for each one of them, calculates it all for you automatically. Gives you the biggest one. You could be done if you want to. That simple, that easy. $2,900. But now remember, we talked about, is it always the best? What if they need to take that standard mileage because of they had taken depreciation in the past, or they are expecting a bigger year next year with more mileage? There could be different factors. And to get back to that is Control N to get back to our asset manager, back to our vehicle, back to the Nissan we entered, and we could, if we wanted to, force the actual expenses, and then that's going to give us the actual expenses moving forward. We're not going to do that for today. Just want to point that out. So we entered some basics with some mileage and some totals, and look at all the calculations taking place and automatically. Also notice the form 4562, I said earlier, not the most fun form to be in. It's done. I don't have to mess with it. Obviously, you want to give it a check. You want to look at it, but 99% of the information you enter, you're done. You're ready to move on. I think we had a couple of more questions pop in. Let's go for those.
We have a question from Rolanda. She said, I missed the difference between commuting mileage versus business mileage. Can you explain?
Sure. Quickly on that, we will talk about the IRS business mileage is, and I'm running I've got about 10 minutes left on this, so I'll just kind of summarize it. We can't count the mileage back and forth from our tax home to our principal place of business. So that's essentially our commuting. So when you're driving to work, or if you're driving to a headquarters where you work from, that's not going to be counted. So like an example we use with a clear difference, and someone asked this question earlier, and I really appreciate it, is if I drive from my home to pick up a client, I'm a taxi driver, is that deductible? Yes. You're not driving to your office, you're driving to pick up a client. That's meeting a client. If you drive to the headquarters first and then drive to pick up the client, that drive to the headquarters is not deductible. So that's just to kind of summarize what we talked about there. So let's take a look at this just a little bit further, because we can get some real extensive calculations going on with this. I'm going to go back to Control N. And I'm going to go back to my vehicle allocation, back to my Nissan, back to my mileage and expenses. I drove 20,000 miles, right? We said 10,000 of that was commuting, or half, and that's also my personal use, if we want to put in there. I could have some more miles that go for my tax preparation. That's another Schedule C, if you look on my forms tree, that I have listed here. Now, what if they told me 6,000 miles? Now, red flag, because if I do that, I'm running a little bit over on my 11,000 miles, because I only had 10,000 miles that weren't commuting. Software is going to let you know that. Got your back. Let's say we got 3,000. We say, no. Even though you put the logo on the car and you're driving around town, that doesn't count. We talked about that. So we're going to do 3,000. We're going to close. Now, we obviously increased our mileage here, but we split it between two Schedule Cs. This is some serious tax calculation going on for you here. Let's go back to our car truck form. We have a bigger standard mileage now, but we also have a bigger percentage of business use. Let's look. Actual is not checked. We're still taking the standard mileage on that one. And we look at our Schedule C for landscaping. Car and truck expenses, entered. We're done. We look at our Schedule C for tax preparation. Car and truck expenses, entered. We're done. It can be that simple to enter that information. And that is giving you options for your client. That's giving you the best option for them, letting you and them work together to maximize their taxes. Remember, this is tax code. We're supposed to take advantage of this. We do it by the letter of the law. Let's get every dollar that we can get. Now, let me show you something else. On our Schedule C, we've got a special calculation built in. If you scroll down to Part 4, somebody comes in, they either didn't keep great mileage, or they didn't keep great records of all their actual expenses, or they know that that's what they want to take because they just drove a lot of miles. If you want to just do standard mileage, you just enter it on Part 4. You click this box at the top to override. You answer pretty much the same questions. We'll even pull them forward for you, if you will. Answer that written evidence, and we'll use that to calculate box 9 if need be. But remember, it all starts with this module here, which has some very nice calculations built in. And if I was to go in and change just a couple of things on here, let's reduce my business mileage on each one of these. And increase what I paid for the car. And let's see how the calculation looks after that. Now, because the percentage use is less, it may still be standard, but let's take a look. This time, actual is checked. It's going to be better for us to use the actual expenses on this, including the depreciation, but it's done. The forms are still filled out. The Schedule C still has the car and truck expenses. The 4562 completed for me. That's simple. That's streamlined. Let's go ahead and pause for questions on this one.
Any questions, guys? Feel free to unmute or write in the chat or the Q&A, and we'll go ahead and read them aloud.
Oh, okay. I see that chat was coming from Richard. I just saw the number pop up and assumed there might be one there. So that's kind of what we've been talking about. That is you making the most for your clients. And that's you using this software to take advantage of your time, which is the most valuable asset you have during tax season. That's streamlined calculations. That's providing a valuable service to your client. That's all included with what you get with TBP. But TBP doesn't stop there. Remember, the T is just the first letter. Let's talk about TBP just a little bit more. Oh, by the way, here are some nice resources, and I did use these putting together the presentation. Obviously, irs.gov, it's a great resource. Specifically, you can go to the small business section and look at deducting business expenses. There's publication 463 for travel, gift, and car, and 2 IRS tax topics that are very good and very useful, and where I got a lot of this info for you guys is tax topic 510 and 511. Just Google those, and you get a lot of this information and look at it yourself. With the TBP Pro Desktop, we obviously do a very good job with vehicle expenses. That's not all we do. It is one of the most reliable tax softwares on the market. We have text marketing capabilities to where you can text one client or multiple clients. We have remote signatures, easy due diligence requirements, speaking of audits, built-in document management, paperless office built in all in one place. If you have multiple offices, we've got multi-office set up. And if you're doing the bank product returns, we've got deep discounts for the tax software, including industry-leading rebates as well. We also offer bookkeeping and payroll packages. one of the industry's only turnkey solutions to offering this. And because of the way in which we do it, you can be earning monthly year-round revenue in days thanks to our 100% supported software in which we do most of the work on our end for you when it comes to the bookkeeping and the payroll. Everything is provided by us, including the software and our very own proprietary client management system, SmartNet, which allows to keep your clients in a CRM in the cloud, track your marketing, even send email quotes to them. Speaking of SmartNet, SmartNet is built in with our custom mobile apps. So a lot of softwares out there provide a mobile app, which is kind of a cookie cutter, if you will. Everybody downloads the same app, and then they got to set it up to your office. Ours, not so much. Directly downloadable from the app or Play Store. Matter of fact, check out Amari Multi-Services. This is a live screenshot from the Apple Store. Amari is one of our trusted clients with his own mobile app in which he can have data collection, appointment scheduling, live stream meetings for that face-to-face personal touch with finishing a tax return, even taking payments online. All that information stored in our SmartNet application where you can get to it in seconds. Thank you so much for joining us today. And that is a photo finish. We allotted an hour, and I'm looking at 2:59. So I wanted to stay within that. I know our time is valuable. Please feel free to stay on. I'm not going anywhere until everybody has all the information that they need about what we can do with vehicle expenses and about what TBP has to offer. So we invite you to join TBP, check us out, and let us help you turn your office into a year-round revenue machine.
Awesome, Jason. Thank you for sharing all that knowledge. We hope all of you guys who join us today, we hope you receive that knowledge and that you take action. Now, if you still have any questions, feel free to let us know. Like Jason said, he's going to be here for another 5 minutes if possible and needed. We just want to make sure that we respect your time. We said 3 o'clock, so it's 3 o'clock now, but again, we can hang out for another 5 minutes if needed. I also want to remind you that we not only provide tax software and those that amazing mobile app that Jason shared and the platform. We're more than that. We're a community. We're building one of the largest community of bookkeepers, tax pros, accountants, and we want you to be part of it. And as a matter of fact, you already are, because you've been here and you share your time with us, which is one of the most valuable things that we have. So I'm going to invite you to visit our website, which is tbppro.com, tbppro.com. Check us out. You can also follow us on social media. We are on Facebook. We're social, okay? I mean, we're on Facebook, we're on Instagram, we are also on LinkedIn. So check us out, find out more about who we are and especially how we can help you. I mean, at the end of the day, like Jason said at the beginning of the webinar, our mission is simple, and is to turn your office into a year-round revenue machine. And if you want to find out more on how we do that, just feel free to go to our website, check us out, send us an email. You can send me an email personally, or Jason. My email is rsantos@tbppro.com. You can also send an email to jgardner@tbppro.com. And again, thank you for coming. Thank you for being here, and we hope you find value on the information that Jason shared. Jason, I see we have a question here. I'm interested in getting a demo for the tax software, and how much annually does it cost? Great. Brenda, I'm going to post Jason's email in the chat. Feel free to send him an email, and he will personally give you a demo of the software. tbppro.com. Any other questions? So Jed said, thank you so much. Dalila say thank you. Carlos Martinez say thank you. Thank you, Carlos. Thank you, all of you who participated. And I believe, Jason, we don't have any other questions, so if you want to close it out.
Fantastic. Well, thank you, Richard. Thank you, everyone, for joining. Thank you for the questions, and looking forward to continuing conversations. Everyone have a great day.
Awesome.